Okay, so I'm gonna frame us the breakdown of the 28th of February GBPUSD successful trade. So I'm gonna try and be as short as possible because I want you to get what we did without having to sit here for an hour. So what happened is we start with the daily. We looked in the daily time frame and I noticed that we came off this bullish fair value gap right over here. So the reason why I look at the daily is because the daily is the time frame in which the banks operate. So on Wednesday, I noticed that we had downward move into this fair value gap, and Thursday rejected and went upward. So I knew that we were moving away from this PDRA and moving into this bearish fair value gap here. We don't necessarily need to move into it, but it is a point of attraction that price may be interested in going to. You see, the main thing is to be able to have an idea of where price is gonna go. So the first thing when I looked at the daily, I thought maybe okay, we're gonna sweep the last week's low, and then we're gonna move upward, right? But that wasn't the case because Thursday and Friday moved away from this point of interest. So with the information that I had, I went down to the hourly time frame, and from the hourly time frame, I was able to notice that price had left a fair value gap here, you see. And so the reason why I actually picked out this fair value gap and not this one is primarily because this fair value gap was closer to a bearish fair value gap that was unable to continue the trend lower. So with this bearish fair value gap and this bullish one, we had a balanced price range. So for me, this fair value gap was stronger than this one. And that is the reason why I didn't focus on any entry into this fair value gap, but rather into this one. Now, the reason why, I think you can notice by now, you can see that price came into this fair value gap and then left. And you might be wondering, why didn't I send the signal when price came here? Because normally on a normal day, my setup would look something like this. It would be here, stop loss here, and then we would have aimed for the liquidity that we wanted, which was this fair value gap here, and then that would have been a good trade. But the reason why I didn't frame it that way is because this time frame is too high. You see, meaning that the risk or the pips for risk and stop loss would have been way bigger. So what I had to do is I go down to my favorite time frame, which is the 15 minutes, and this is where I frame the idea. So now there's two rules. The first rule is I don't enter a trade before 8 o'clock, right? So this chart is in South African time, 8 o'clock in the morning, which is somewhere here. Before that, prior to that, let me actually just mark it here. Before anything before this, I am a speculator in the market. I am watching what price action is doing. All right. So before 8 o'clock, I see here liquidity is taken into. So we take out the liquidity here, and then we enter this fair value gap. Now the next thing I'm looking for, or the next thing I was looking for, first of all, and the next thing everybody should be looking for is where can I get a entry, right? The lowest possible entry. And what I looked for was this. So I looked over here, right? So you may not have noticed it, but I noticed it. So let me remove this blue line so that you can see. From here to here, let me zoom in for you. We have what is known as a bearish fair value gap, all right? So my first sign was, or my first idea was, if price actually wants to go higher, then it should violate this fair value gap. You see, if price respected the fair value gap and went lower, then that means we weren't ready to buy. But if price violates the fair value gap, then we're ready to buy. That was my mindset. And so when we got here at 7:45 and I got this candle closed, it violated this bearish fair value gap and then gave me the signal to be confident in looking for buys. And so once more, to get a sharper entry, we go down to the 5 minutes, which is where I went. And then I came here, right? On the 5 minutes, I noticed that there was a fair value gap here. Price respected it, pushed upwards, violated, and closed above this bearish fair value gap over here. So once it closed over, it gave us a bullish fair value gap right here. Let me put mark right there. So once we had this close above the fair value gap, the bearish fair value gap, it became an inverse fair value gap. So there was one of two things you could have done. Once it violated, you could have entered immediately as it violated the fair value gap, or you could have waited for another entry opportunity, which is what I did. And I noticed that we had this bullish fair value gap here, and then I signaled everybody to set buy limits for here because I expected price to come back. You see, that's one thing when it comes to inversion fair value gaps. Once price violates the inversion or violates the fair value gap completely, it will normally come back just to the tip of the fair value gap and then continue the march. So then I told everybody, set your buy limits over here, set your stop loss here, because this is the low that tapped into the fair value gap. We call this in ICT an intermediate term low, meaning that this low is protected by institution. That's why you can see all this heavy price action where they make fair value gaps and they mitigate them, make another one and mitigate them, because they need solid price action to prevent price from coming back to this low. You see, that's why I was confident in leaving here. You could have also left it here as a tighter stop loss. Why? Because this candle mitigated this fair value gap, making it an intermediate term low. You see, when this candle came into this fair value gap, it mitigated the fair value gap, making it an intermediate term low. Did you see price come back for it? No. When we see this fair value gap get mitigated here, it becomes an intermediate term low. Did you see price come back to it? No. You see, so that's the formula. You see, fair value gap. You see the break of structure. Break structure successfully. It also violates this inversion. You see, I want to show you guys the inversion thing that I was talking about, right? Notice this. So here's the inversion fair value gap, right? Once price violates the inversion, it always tends to make a U-turn. You see this candle here? A move back. This move back is your opportunity to get in. It doesn't have to come all the way back, but because it violated and you know that the market is bullish, you know that any movement back is a cheaper price for you to get in and join the market on the upward move. Now back to our point, we see another fair value gap here. Price balances the fair value gap. Does price come back to it? No, because it's an intermediate term low. So that's one thing you can take away today, is that price doesn't violate intermediate term lows. You see, break of structure, fair value gap, price comes back to visit the fair value gap. Does this low take out this one? No, because it's a protected low. It's an intermediate term low. See, and then here obviously we see that the low gets taken out, but that is because price needs liquidity. So there are cases where price needs liquidity and then it takes it out before continuing, but I will cover it in a separate video as to why price came back for this low, right? But now back to the main point, is that we were able to understand that because this inversion was violated, this was the cheapest price we could get in on, and this is where we ended from. I told everybody, set your buy limits here, stop loss below that low, and then aim for the equal highs for TP1 and the fair value gap on the 15 minutes for TP2. And then that's how we framed our successful trade. So I know I did go in a rush. I'm really trying to keep these recaps short so that nobody has to spend 20 minutes watching a video. I really want you guys to just understand what was going on in my head and move on with your day. So TP2 was here at this fair value gap, and it was a 1:5 ratio. I personally made about 500 rands from it. I'm only risking about 100 rand, so it's really, if you ask me, it's a good day's work, you know. So really tough price action right there, and then it hits TP, retraces, continues a bit, but then goes down. So another lesson you can take is don't go past the mark you aim for. So if you hit TP2, or you set this as your take profit, don't try to aim too far. What you can do is you can leave a runner, price a small position that can run further than what you expected, but with the stop loss at break even so that you don't make a loss. So that is actually all that went through my head when I was framing the setup, and that is how we were able to catch this beautiful trade. And I really hope you guys can learn from it and can also catch these beautiful setups on your own. But as always, I'm just here to help and better everybody that is in this group. If you found the content useful, just show your support with a nice reaction, a reaction emoji, and kindly share the group link, because we're just trying to help out as many people as we can. We know that it's tough out here, providing for family and taking care of yourself. and we just here to make sure that everybody has at least an external means of making money. But other than that, guys, enjoy your evening, and I'll see you guys tomorrow. Peace out.